Auf das heutige Gespräch habe ich mich sehr, sehr gefreut, denn ich hatte Raoul Pal zu Gast. Vielleicht kennt ihr ihn noch nicht, ich bin mir sicher, das wird sich heute ändern und ich bin mir sicher, ihr werdet ihm anschließend folgen, beispielsweise auf Twitter. Ich folge ihm schon etwas länger, denn Raoul Pal war früher für das Hedgefonds Managing Europe bei Goldman Sachs zuständig. Er war früher ein Bond-Guy, das heißt, es ging bei ihm um Anleihen, wie bei so vielen Profis. Mittlerweile hat er aber, wenn ihr so wollt, die Fronten gewechselt. Das heißt also, er ist nicht mehr bei Goldman Sachs. Er lebt heute auf den Caymans. Ich glaube Grand Cayman. Man kann es ja durchaus schlechter haben. Und er ist nicht mehr ein Bond-Guy. Er ist immer noch ein Makro-Guy. Auch darüber haben wir also gesprochen, über den Gesamtmarkt. Aber insbesondere ist er, so wie er es selber sagt, irresponsible long in Bitcoin. Also unverantwortlich long investiert in Bitcoin und in Ethereum. Er ist ein großer Fürsprecher für Kryptowährungen und ich finde es natürlich immer interessant, wenn jemand von der institutionellen Seite kommt und dann so seinen Weg geht und am Ende sagt, Kryptowährungen, Bitcoin, das ist das, was ihr braucht. Wie schon gesagt, wir haben aber dennoch über den Markt gesprochen, wir haben dennoch über die Gefahren gesprochen, die derzeit auf insbesondere Aktieninvestoren warten. Also es war ein rundum unterhaltsames Gespräch. Es geht damit los im Übrigen, warum er unbedingt, das hat er schon häufiger mal besprochen, warum er schon als Kind gesagt hat, ich möchte zu Goldman Sachs. Wie kommt man auf die Idee? Ja, waren es die Partys, waren es die Frauen, waren es die, ich möchte es gar nicht weiter aussprechen. Also hört euch das Gespräch an und tut mir bitte einen Gefallen. Es war für mich überhaupt nur möglich, Raoul Pal einfach mal anzuschreiben und dann auch einen Termin mit ihm zu bekommen, weil ich ein klein bisschen versucht habe, über die private Schiene zu gehen. Denn Raoul Pal ist gebürtiger Spanier. Was habe ich also gemacht? Ich habe gesagt, meine Frau ist Spanierin, was ja auch stimmt. Und ja, so den ein oder anderen lustigen Spruch, ich muss jetzt ein bisschen überlegen, weil meine Frau sitzt hinter der Kamera. Also, bei spanischen Frauen, es wird nicht langweilig. So, und sie schmunzelt. So, und ich glaube, er hat vielleicht auch geschmunzelt bei dem, was ich da geschrieben habe und hat gesagt, komm, wir machen das. Ich vermute mal, ich bin mir nicht so sicher, ob er meinen Kanal vorher kannte, doch ich bin mir relativ sicher, er kannte ihn vorher nicht. Ich möchte aber gerne für euch auch andere haben und ich halte das nicht für unmöglich, denn es gibt, ja, Raoul war bei CNN, war bei CNBC, er war wirklich bei den Großen zu Gast und ich möchte auch andere für euch ranholen. Warum nicht mal einen Elon Musk oder einen Ray Dalio? Das ist möglich, aber dafür brauche ich eine gewisse Größe. Also tut mir einfach den Gefallen und abonniert meinen Kanal. Es ist ja nichts dabei, es kostet euch nichts und je größer ich werde, desto größer können dann auch die Gäste sein und nicht alle haben ja spanische Ehefrauen. Elon Musk, der hat schon die zweite oder dritte, ich weiß es nicht. Seht ihr, darauf müsste ich mich dann vorbereiten, wie das Gespräch mit Elon wäre. Also, hört euch das Ganze bitte an. Es ist ein sehr, sehr unterhaltsames Gespräch gewesen, dauert in etwa eine halbe Stunde, ist auch untertitelt. Nehmt es mir nicht übel, ich war ein bisschen aufgeregt am Anfang, ein bisschen viel TH, aber ich glaube, es wird euch gefallen und dann legen wir mal direkt los. Today we are here with Raoul Pal, the CEO and founder of Real Vision and Global Macro Investor. Raoul, thanks for being here. I'm so excited. And how are you?
Great. Thanks for asking me on as well. Looking forward to this.
Yeah, absolutely. Well, let me start. We all saw the movie Wolf of Wall Street, and I heard that one of your main goals in your life was to become a hedge fund manager at Goldman Sachs. And as we know, because of the movie, the great advantages the hedge fund managers have, they have plenty of parties, plenty of, I don't know, unlimited drugs and girls and all these things. So it's not unnormal that this was your wish, but what was the real reason that you wanted to be in this world of the hedge fund managers and Goldman Sachs especially?
So I grew up in the 80s, and the 80s was all about Wall Street, the movie, and Mike Milken.
And the old one with Michael Douglas.
Exactly.
Yeah. Okay.
And so, that was my cultural reference point. And I was a kid. I just finished university back in like 1990. And I remember speaking to a friend of my father's who said, what are you going to do when you graduate? I graduated in the middle of a recession, so I wasn't going to get a job immediately. And I said, I don't know. Dad wants me to go into marketing because he was from marketing, but I quite fancy finance. And the guy looked at me and said, it's really simple, Raoul. You can go and work for a great marketing company like Mars, and they'll give you free Mars bars. Or you can go and work for a bank and they'll give you free money. So I thought, okay, that made sense. So I eventually managed to get myself into the trading room as a salesperson in equities and equity derivatives, which was a big boom market. That was the same time of the rise of the hedge funds in the 90s. So the really famous hedge funds of Soros, Tiger, More Capital, Tudor, all coming out of that. And they ended up becoming my clients. And I realized that I'd learned a lot from them. And it got to, I eventually ended up starting and running the hedge fund sales business at Goldman, where I was kind of the leading salesperson in Europe to the hedge fund industry. And I saw the recession coming in 2000. And I thought I wanted to trade it as opposed to advise these guys. And luckily, the largest hedge fund firm in Europe at the time, GLG Partners, said, look, come over to us and start a global macro hedge fund. And it was really about the opportunity of pitting your wits against the market, because when you've spent so long advising others, you want to see whether you can do it yourself. Okay. And, you know, the stories of fast living, it's actually the opposite most of the time, because you're actually working so damn hard, having to wake up in the middle of the night and check the Nikkei or dollar yen, and you live in fear your entire time. So yeah, it's very different. It's a brutally hard business, but incredibly rewarding.
Cool. What would you say? I know completely different universes, but if you could say it in short words, what is the main difference between a hedge fund manager or a fund manager in general, so an institutional guy, to a private investor? Yeah, is there a main reason? I mean, I would say that maybe professionals first look at their potential losses and try to cut them, think about their exit strategy. But what would you say? What is the main difference?
The real difference is portfolio construction, which is what you're alluding to. Because you're a steward of somebody else's capital, you have to be careful with it, because you have a fiduciary duty to your investors. If it's your own money, you can do what you want, basically. But most retail investors lose money trading. Mm-hmm. People don't think about portfolio construction, risk management, stop losses, and particularly sizing of positions and time horizons. Mm-hmm. Those things portfolio managers think about. And different people have different variations of that, but they worry about the downside more than the upside. While retail investors tend to think, I can make a fortune in this. Mm-hmm. Most hedge fund managers don't see it that way, except occasionally when they find that one magical opportunity that they can really get into.
Absolutely. Yeah. Okay. So I would say, no, you call yourself a macro guy. Is that right? But if you look at Twitter or your latest videos in the last month, I mean, we could say you're a crypto guy, more or less. What about diversification? I love it. I hope that one day you will have a T-shirt, irresponsible long. Is that right?
I've got one.
Oh, you've got one. Okay. Can I buy them?
Yeah, on the Real Vision website.
Okay, cool. Yeah. What makes you think that crypto, Bitcoin in general, are so much better than any other asset class that you probably changed your behavior of investing in the last month like that?
Yes, I mean, look, if you were to go back to my Twitter feed 2 years ago, everybody would say I was boring because all I talked about was bonds, you know, and because I saw what a great trade they were. But then Bitcoin comes along and we talked about portfolio diversification, all of this. But occasionally, and I hinted at it, occasionally you see a bet that's so dominant and so pervasive and so powerful that holding any other asset is going to lower the returns. Mm-hmm. Now, of course, you're taking maximum risk in doing it, but I'd done so much research that I felt like I could give it my full conviction, which I've never done before. I've been close in the bond market before, but I've never, ever taken this much risk personally before because I thought the opportunity was so dominant. And it's dominant in a number of ways. One, it's this perfect reserve asset where you can't create more of it. So it has value in our new digital world. We're all starting to understand that. So digital gold. But unlike gold, it's also a new technology. We can build a financial system on Bitcoin and blockchain overall. And what makes it even more powerful is it's basically the best behavioral economics system ever created. Because if I convince you to join my network, unlike Facebook, where I just get to see your face every day, talking about what your cat looks like, I instead get rewarded by the price of Bitcoin going up. Right? Nothing exists like this. It's a network based around a kind of pristine asset that the more people come into it, more people adopt it, more people use it for different purposes and build businesses on it, the more valuable that network is. So this has an exponential element to it. Now, people can't think in exponential terms. We're idiot humans, and we only think in linear terms. So Mark Yusko, a good friend of mine, talked about if he walked across his office in 20 linear steps, he'd get to the other side. If he walked in 20 exponential steps, he'd go 3 times around the world.
Okay. Yeah, okay.
And so when stuff goes vertical and it has this network effect, it becomes incredibly powerful.
Okay. Yeah, absolutely. I have to be honest. I mean, I'm in the stock market since 1996. I bought my first Bitcoin in 2016. And I think it was 1.5 or 2 years ago that you put me in an extreme FOMO situation because a friend of mine, I won't say his name because he probably wasn't allowed to give me your piece of work in the Global Macro Investor because he paid a lot of it for it. I think it's mostly for institutionals, right?
Yeah.
So I won't say his name. I read it in the airplane. I was on a flight to Aruba, I think. And I read what you wrote about Ethereum.
Yeah.
I got immediately stuck in this FOMO effect. As soon as we landed, I had to transfer money and buy Ethereum because it was so convincing what you wrote about it. In between, I'm 50-50 Bitcoin and Ethereum. Not because I invested so much in Ethereum, but it went so well since then. And 2 completely different systems and thinking behind. So what's your main decision if you talk about Bitcoin and Ethereum? I know that you're invested in both cryptos. What's your thing with Ethereum?
So I think Bitcoin is the current narrative of Bitcoin is the digital gold idea. So we all hear this all the time, that it's going to protect you against inflation and Fed printing and that. It has a certain set of attributes. Mm-hmm. Now, as yet, not as much has been built on top of it because it's like this perfect thing in itself. We can all own it, easy to buy, easy to sell, easy to store. Ethereum's somewhat different because you can create smart contracts that haven't yet been created on Bitcoin. And those smart contracts allow you to reinvent the entire financial system. So whether it's an insurance contract or whether it's a bet between you and I that has certain attributes to it, or whether it's creating automated decentralized finance where you don't need banks, this is where all of the developers are really focused, is Ethereum, because it's a much more flexible system to develop stuff from. So I think of one as an asset and the other as a platform.
Okay.
Now, again, network effects on platforms, we've seen it before with Google, Facebook, Amazon, are super powerful because if you bring more developers developing more applications, then more people use it. It can become, I think, even larger than Bitcoin in market cap terms. So it doesn't have the same supply and demand.
A bit more risk. you would say, because it's technical, and so other competitors could eventually come to the market.
Yes, it could, although it's pretty big right now. So it's difficult, but it is going through a change to this ETH 2.0. You know, it's not a finalized state of affairs. So anything can change that. As you said, another competitor can come along. Difficult to compete with Bitcoin at this stage. You know, Bitcoin's almost $1 trillion right now. It's very difficult. Ethereum, it's possible. And we don't know where all this is going. You know, the decentralized finance has just started. My guess is not until 5 years' time will we see where it's really going to. And half of the other applications, like tokenizing communities or tokenizing music and intellectual property rights and digital property, are only just starting. Yeah. And they could end up developing on other platforms too. So I keep an open mind and actually have a small allocation to a bunch of other protocols and tokens, because I see that people are developing different solutions for different parts of this internet of value. Let's call it that. So if the whole thing is the internet of value, different things will play different roles, much like we all use. I'm on a Mac. You know, I'm using one phone system. You're a different computer. We don't care in the end. Just different things is where things got built.
Yes, true. Okay, we come back there at the end. You recently addressed your concern about the stock market, because if you look at valuation, no doubt it's heating. But this kind of crisis we have right now is, if you compare it to other situations like these, other crises, we are not short of any liquidity right now. So I easily could create a scenario where I would say, well, why shouldn't the stock market keep on rising another 30, 40, 50%? It's not based on valuation anyway. So what is your main concern that this market is too hot right now?
So I hold two thoughts in my head. One is that this is a bubble, and the other that if you divide the stock market by the Fed balance sheet or the G4 central bank balance sheet, it actually looks like it's normal. So i.e. the denominator we're looking at the wrong thing, the dollar or the euro, and it's actually to do with, as you said, the liquidity. And in that case, it's actually not that stretched. So that's one school of thought. And I understand that, which is where you're right, saying it could go up another 50%. But then I look at the other side, and I've been in markets for 30 years, and I've never seen a situation where retail investors are record long. There's record speculation in options, record speculation in small stocks, usually the most speculative stocks. Hedge fund option dealers have record amounts of short gamma because they're hedging the options.
Yeah.
Then we go to the hedge funds who have record gross exposure to the market, record net exposure to the market. Then we go down to margin debt, all-time record margin debt. So people have borrowed money to bet on the stock market. Then we go down to the level of mutual fund managers, record low all-time positions in cash. Then we go to the bond market, the big daddy, record short the bond market. Then we go to the dollar, record short the dollar. So, and then we go to things like copper, the reflation trade, record long. So everybody is one side of the boat, and anything could tip that boat over. Now, that's not an economic event, it's a markets event. Okay. So that's what I'm worried about, is a small spark here could cause a big fire. And it feels, and I don't want to sound alarmist, it's kind of similar to 1987 style setup where this happened. It was actually bond yields that probably broke the market. And we're seeing bond yields rise kind of every day right now. And at some point, it snaps the market, because you can't value Apple and Amazon and Tesla on zero bond yields and then see bond yields rise, significantly, and those stocks have the same valuation. But there is this fight with liquidity. So it's a really complicated world out there, but it makes me nervous. So I'd rather find things that work in my favor than fight it. So I won't short the market really. But I won't commit a lot to it because I'm too nervous.
Okay. understand. If we talk about valuation, is maybe there's the only part of the stock market, the emerging markets or the commodity stocks where you could say, okay, if the market rallies, maybe these valuations will keep up and you get at least a little bit of a risk reward that is in your favor?
Yeah, I totally agree. I mean, emerging markets, if you look at emerging markets versus developed markets, or particularly versus the US, they've massively underperformed. I mean, it's the biggest underperformance almost in all history.
Yeah.
And that's been a function of the strong dollar had caused that. Now, the dollar's weakened recently, and interest rates are changing potentially in the US over time. And let's say the dollar remains weak or just trade sideways. That's a very good situation for emerging markets, and nobody has capital in it. We're starting to see the flows, but it's still small in comparison. So emerging markets are a small door. So if you push a big amount of capital, they go up a lot, which is why you get rewarded for the risk. So normally speaking, when you come out of a recession, everything rallies, and then the riskier assets, being emerging markets, will rally a lot more. And if we're right, then they could go on for 5, 7, 10 years. And normally when you look at these cycles, when the dollar stabilizes or goes negative, emerging markets go up 400 to 500%. Now, the S&P or the DAX or whatever is not going to go up 400 to 500%.
Certainly not. No.
So there's the difference, and there's the opportunity. So markets like India become extremely interesting.
Okay, cool. 2 more crypto questions before we're done. First, what do you think if we get now? I mean, for years we are in a what I would call risk on in the market. What do you think will happen to Bitcoin or Ethereum or other cryptos if we have maybe only for a limited time a risk off in the market?
I think they'll get hit because there's leverage in the space. There's hedge funds in the space now. There is so there's the interconnectedness with the other financial markets. So I think they'll get hit. So I fully expect that, and you should be expecting 30 to 40% drawdowns in a crypto bull market, and you should expect them reasonably frequently. And we've just had one in January, and we'll probably get one maybe in March or so. And we'll probably have another one before we hit the heights of wherever we end up going. So yes, I think people need to be aware of that, which is why I always say, don't trade crypto with leverage. Unless you're a hedge fund or somebody who uses leverage naturally, don't, because to stay in the trade, you must be able to absorb a 30 or 40% pullback.
Or if you could offer bonds like Michael Saylor does, whenever
zero interest rates to buy Bitcoin. Amazing, right?
Yeah, crazy. But final question, and you probably will hate it, and I understand why, because that's what get asked, or the questions I get every time. What's your target for Bitcoin in 2021 and maybe long term? So
my view has, and I've constructed my price targets based on a number of things, which is the stock to flow ratio from Plan B. Anybody needs to check that out on Twitter. It's very important. I then use a regression on a log chart, long-term chart, and it trades within this nice regression. So it normally gets somewhere like 2 standard deviations overbought, maybe just less. If I look at a bunch of other kind of technical patterns, and I've looked at Metcalfe's law adoption models, they basically all come out to roughly the same thing, which is somewhere between 250,000 and 400,000.
For this year?
For this year. Mm-hmm. Now, whether that ends in January or February, I don't really know, but it's still a lot higher. It's still 5, 6, 7x from here, which is extraordinary. But again, we don't think very well in exponential terms or logarithmic terms. We're so used to linear trends. So, but anybody who was long Tesla last year understands the power of an exponential trend. It gets crazy, then crazier, then utter insanity, and then you double it again. So yes, so that's my target. I think we will see, and I think we've seen it here at 50,000, some profit taking from people because it's up 5x for most people now. So people want to take maybe their original bet off the table. Then it gets up to 100,000. I think a lot of people will take a slice off because many people will have made 10 times their money. And that may cause the price to trade sideways or down for a while. And then into year end, we can have a huge run. But then now there's more institutions involved. As we know, institutions do quarterly portfolio rebalancing. So that's going to bring a new dynamic because they're going to have to sell a ton of Bitcoin at year end just to bring their allocation back to sane levels.
And is there a long-term target? You would say, okay, now it's time maybe to sell something because the speed of the rising, sometime, 2, 3, 4, or 5 years, it will be slower than today, right?
That's right. I mean, generally in these exponential trends, it goes less and less as you go in terms of rate of change. So my view is it probably the next cycle. So let's talk 5 years time. I think it might get to $1 million for a Bitcoin. Now that means it would be 3 times the peak. Let's say the peak's at 300,000, but it probably falls back to, who knows, 100,000, let's say. So then there's still another 10x opportunity in a few years time. So, it's still very attractive as an asset. And as that happens, the whole space will mature. So some of these other tokens, protocols are going to become also extremely attractive as they become more liquid and more people are attracted into the space. So it's a very, very exciting thing, which is why it's taken a lot of my focus because A, we've all had to learn a lot and B, the opportunity is so massive.
Yeah, let me tell you at the end, my worst video on YouTube with the most thumbs to the downside was in 2017 when I made a video about my decision to put my initial investment in Bitcoin off. And I told that I was done immediately. 1,000 thumbs went down in, 2 hours or 3 hours. And well, it was too early, but now I know better and I'm still invested. So everything's fine.
Yeah, I did the same. I took off all of my bets because I made 10 times my money from 200 to 2,000. I thought I was a hero. I said, I don't understand all these hard forks and all of this stuff. I said, I'm out. This is getting crazy. It went up another 10 times in the next 5 months. And when I announced that on Twitter, I got killed for it. And they were right.
Raoul, it was so great to have you here. Thank you very much. Wish you all the best.
And you, I really enjoyed it.
Thank you very much. Bye-bye.
Bye-bye.
Ich hoffe, das Gespräch hat euch gefallen. Einen Hinweis möchte ich euch noch mit auf den Weg geben. Morgen früh lade ich einen Podcast hoch und dort geht es um das Portfolio von Berkshire Hathaway, also von Warren Buffett, und um die eine Aktie, die ich kaufen würde in diesem Portfolio. Also hört es euch an, ist morgen früh ab 6 Uhr für euch verfügbar. Am besten schon mal rauf auf den Podcast und einfach abonnieren, dann könnt ihr es nicht verpassen. Das war's für heute. Ich sende euch herzliche Grüße. Bis dann und ciao.